Hi, everyone. I'm Wataru Suzuki, a reporter from Nikkei Asia. Welcome to the session, Financial Institutions Bringing in the A-Game into Crypto. This is a really good time to be talking about crypto. The total market cap of Bitcoin and other cryptocurrencies are worth nearly $2 trillion today. Many institutional investors, venture capital firms, and companies are increasing their exposure in this new asset class. The question we want to ask today is the crypto boom threatening conventional finance? As more people jump into the industry, is it going to disrupt payments, banking, and investing as we know it? So here to discuss this topic, we have three panelists with us today, Joaquín, Benjamin, and Sandeep. Thank you for joining us. I want to start with a quick round of introductions. So Joaquín, could you start with some background on yourself and what your company does?
Yes, absolutely. First, thank you for having me. It's great to be with you today, and especially with such great panelists. I'm Joaquín. I head crypto for Nium. I've been at Nium for the last 2.5 years. And we have been really focusing on trying to figure out how crypto was going to mean for the financial system. So we decided to take a big stride and get really deep into crypto. So I'm leading the charge with a team here at Nium, and we're really excited to be here with you guys.
Yep. Benjamin?
Hi, Benjamin Quinlan here, CEO and Managing Partner of Quinlan and Associates. We're a strategic consulting firm specializing in financial services and fintech. And we do a lot of work in the crypto and digital assets ecosystem as well across a whole variety of different players. Outside of that, I'm also the chairman of the Fintech Association of Hong Kong. So providing, I guess, some broader perspectives on how crypto fits within the broader ecosystem here in Asia. Hopefully, what I have to share today would be useful, but it's a pleasure to be part of this panel.
Thank you. And Sandeep.
Hi, great to be here. Sandeep Malhotra. I run products and innovation for Asia Pacific, been with Mastercard for 25 years. I joined when I was 12, just a joke. So our mission is to basically drive more choice and flexibility when it comes to payments. So I work on creating and scaling new payment solutions. And the payment solutions are not limited to just debit and credit. It could be a bank account. It could be a crypto account. It could be CBDC. It could be, a wallet account. So we take all kinds of payment solutions, and then you drive those through digital commerce, which is a new trend. You drive those through open banking phenomena. You make them happen in a real-time fashion, as you see the real-time payment systems popping up everywhere. And then you can make them happen in full or in part, also known as buy now, pay later. And how do you do that? Is you basically do that with partnerships with financial institutions, banks, big tech, startups, fintechs, corporates, governments, and then get into more flows, even reaching the SMEs as to how they pay, they get paid, and they get access to capital. So fun to be a part of this panel.
Great, thank you so much. So maybe we could start with the big question and then dive into the details. Joaquín, Nium is a fast-growing fintech company already disrupting conventional finance through technology. Do you think crypto is posing a threat to conventional finance?
On the contrary, we have come to realize that crypto is yet another evolution of the financial system. Is not going to replace the entire financial system. There are many pieces of our current system that has been for us for hundreds, if not thousands of years, and there's going to be still going on for the future. I'm still looking to those comments that we're talking that cash will be completely replaced within the following 5 years, and 20 years later, we still have most of the world running on traditional hard cash. So in that evolution of the financial system, what crypto is bringing is a new raft of products, a new raft of means of access to financial system. So at Nium, we're looking to bridge the gap between the traditional financial system that we already master with our like very large platform and network into what this new crypto world and Web3 is bringing into the equation. So financial inclusion, new products, financial education. There are many aspects of the crypto that we're very excited to be part of.
Very, very interesting. Benjamin, you're engaging and advising fintech companies in Hong Kong. What are your thoughts on this issue, and what are you hearing from the companies that you're engaging with?
Yeah, I mean, look, I share a pretty similar sentiment, and it really depends on what area of the crypto universe you're looking at. I think cryptocurrencies as an asset class has distinctly opened up a new universe of assets to investors out there. And it's primarily been the purview of the retail market for a very long time. But rest assured, the institutional investors out there are working out the best way to get involved. And, this comes with developments, particularly around regulations. And we see a big opportunity for things around digital securities and, what I would call it, regulated digital assets, which is where I see huge growth in future around this industry. But in addition to, I guess, supplementing what traditional finance does, there are some areas of disruption to be very wary of. So if you look at, for example, the brokerage space, what is the future value proposition of brokerages now that there is a direct access model to the cryptocurrency exchanges themselves, right? In addition to that, what about on the clearing and settlement side of things? Because with the advent of smart contracts, a lot of the institutional bodies that operated in this space may be pushed aside, such as your settlement bodies, your transfer agencies. So while there's distinct opportunities for some parts of the financial services ecosystem, there are very inherent risks to others. So again, it really just depends on where you play, and that will fundamentally influence how you position your business to capitalize or defend against what is happening in terms of the latest crypto developments.
Got it. Very interesting. We'd love to discuss this in detail later. Sandeep, you're at one of the largest payment processing companies in the world. What is your perspective on how disruptive crypto is to the world of payments?
Yeah, so is it disruptive? It is absolutely a lot of fun watching this area. Its applicability and its reach is. It depends on the strong use cases it offers. DeFi is definitely fueling the growth around this. Now it's easier imagined than done. So how do you do that? Is that a threat? Definitely not yet. I rather see that as an expansion of what this world is trying to do, because there is still a need for the connections to be made from the incumbents as well as this new future of services. You still need to off-ramp and on-ramp, the currencies from, the cryptocurrency to a fiat currency, from going to a wallet to a real world. You also need to see, this whole smart contracts happening, and for the smart contracts to execute, you need an oracle. You need a centralized entity to feed the information to the smart contracts. So the conventional companies can play that role, and then you need to integrate into these infrastructures so that the reach happens, so that transfer of money happens, so that day one utility is solved, right? I mean, you want to get into retail payments or wholesale payments, you need some existing universe where you can actually transact on day one. So day one utility. So they can provide that infrastructure, around that. And then the final, the goal is the opportunity is so large that, financial inclusion, access, transparency, you want to get working capital people, nobody's solved that, right? So you could actually take the benefits of this new technology, which does have challenges. It does have a lot of challenges, whether it's technological challenges, financial challenges, legal challenges. The incumbents can share their experience in terms of solving the challenges or solve it together. But solve these needs like access to working capital executed in the form of a smart contract. And the on-ramping and off-ramping does happen to the traditional system. So the Oracle work happens through a traditional system. So we do see that there is a massive, massive role in terms of incumbent to work together to expand this universe.
Oh, very interesting. that leads to my next question, which is, getting into some of the details here. Even though crypto is a booming industry, the most popular applications of crypto are currently NFTs, including things like digital collectibles and blockchain gaming, which is popular in Asia, and also DeFi services. So I'm wondering, why isn't crypto being used to purchase goods and services in the real world? Sandeep, you talked about some of the challenges in bringing in the conventional industry into the crypto world. But could you kind of discuss more in detail what are the challenges in doing that?
Yeah, so number one challenge is, in order for any currency to be used for retail payments, you need stability, right? I mean, some of these free floating currencies are too volatile in nature. By the time you actually pay for your coffee, the price has fluctuated. So not a good thing, right? Now, some of that, so stability is one, regulatory compliance, they need to be regulatory compliant. And the third thing is consumer protection. What happens when things do not go well? So let's say you order like 4 rolls of, kitchen towels and only 3 rolls arrive. What do you do? How do you protect the consumer? So those are very important aspects when it comes to retail payments. The consumer needs to get protected. The merchant needs to get money. So I think we need to solve that. Now, some of it is getting solved through stable coins. So maybe long-term barrier doesn't really exist, actually. So what we are saying is, then it goes to a question of, will a merchant use it? And can a merchant use it, right, for retail payments? So willingness, yes. Can is something we are trying to solve for. And the way we're looking to solve for that is, wouldn't that be great that 80, 90 million locations which we have today, and all accept crypto with no changes to the merchant, or make changes to the merchant in such a fashion that's technologically and business process-wise is not that disruptive. So that's why we're working with this other world to basically say, use what you have, use the existing locations, and the consumer has a choice. The consumer can pay by a card, a bank account, a wallet account, or a crypto account. That's the primary thing, but you need to solve for the stability and regulatory compliance and protect the consumers when things do not go well. But that is primarily the barrier. So working on that very, very actively.
Understand. Thank you so much. Benjamin, what are the challenges that you are hearing from fintech companies that you are engaging with when they are trying to bring crypto into their businesses?
I mean, it's just picking up on this point of payments, right? I agree with what Sandeep is saying, but I just want to add to it. So volatility of the actual underlyings is a big issue. The other ones are really around transaction processing times, the speed at which you can execute a transaction. I mean, the most commonly accepted form of crypto out there is Bitcoin. And Bitcoin is inherently volatile. It takes about 10 minutes on average, to settle a transaction. It's not exactly the most logical thing when you're buying a coffee, as Sandeep mentioned, right? And there's a lot of other alternative payment options out there that are much quicker, faster, and you have rewards that are linked to them as well. So you can get cashbacks, other offers through your credit card, your BNPL, you can pay things off over 3-4 months in installments. There's other ways you can do things. So the optionality is obviously a big challenge. That brings into question, I guess, okay, so then we invent stable coins, because stable coins are designed to address that volatility issue. But then the regulatory point that Sandeep mentioned comes in there, because even when you look at something like Tether, the idea is it's tied to the US dollar. But if you actually unpack their accounts, about 3% of their reserves are in actual USD cash. The rest are in other instruments. So you could say, yeah, it is kind of backed. It is backed as close as possible, but it's not one for one. And that's obviously where you move on to CBDCs. And that's where there's a recognition of, do central banks develop their own crypto version of fiat, right? It is a representation of fiat. It's not the actual representation. It is it in crypto format, right? And that's where you may see much more widespread adoption around the use of crypto from the perspective of payments. But when you've got that many different options out there and the current formats of the way people can pay using cryptocurrency, it doesn't make much sense to the average everyday user. I think there's a lot of potential in it in cross-border payments, which is where CBDCs are going to have a lot of impact, particularly on larger wholesale payments. I think all the auditability and traceability of transactions are going to help from cross-border perspectives, get rid of a lot of the correspondent banking relationships that are currently in the system that hold things up and create, huge data chains that can't necessarily be tied to each other, problems with reconciliation, settlement, you name it. So I do see a lot of potential there. But mainstream retail, not really.
Right. And Joaquín, Nium is in the B2B space. Why are more companies using crypto to manage their expenses or pay their employees, things like that?
So, by the way, there's a lot to unpack in everything that was said. I think that, for instance, for us, and I'll get to the question, for us, remittances, which is our money movement, international money movement, we found that we actually are able to move in real time actual money way faster and cheaper than if we did it with crypto. So crypto today is not yet ready for prime time, but is definitely an evolution that will, once it evolves, will take over these type of money movement scenarios. But for us, for example, it doesn't make sense today. And in regards to the question that you made, why businesses are moving to crypto, first and foremost, all the businesses that do consumer and have consumers, they move to crypto because of the demand. You can see companies like Square Cash and Revolut, Robinhood, they basically multiply their user base and engagement just by adding crypto offering on their portfolio. So crypto is the thing to have if you have consumers, not necessarily for payments, just for the fact that they can invest, they can take advantage of the volatility and just get a few bucks out of $100 investment, right? Which is something accelerating and thrilling for the users that have some free cash to play around. In regards to the payments, we see a lot of corporations looking to crypto to solve a very big burden when they have remote workforce in emerging countries. Volatility, sometimes the volatility of emerging countries is even higher than the volatility of the cryptocurrencies. So they see refuge in these cryptocurrencies in the form of payroll or payments to their workers in those emerging countries rather than paying them in local currency. Stable coins like USDC and USDT are even solving the problem better, because when Bitcoin comes down, that is not an attractive solution, but the US dollar seems to be the reference value point for these emerging country volatility fluctuations. So we see a lot of demand for USDC and USDT, especially USDC, payments to vendors and to workers that are in these emerging countries where the currency is not a good value to hold for the end workers.
That's a really good point. I just want to pick up on something there, because I asked the Fintech community group in Hong Kong, who here pays for things using crypto, right? Or Bitcoin. And then there were a couple of people that rushed to it and said, I do, we pay our contractors and vendors and so on. And I said, what are they paid? What is the reference point around what you pay them in terms of that denomination? And it's still USD. So, you can pay in Bitcoin, but it's still, you're not paying a set 0.3 Bitcoin, every month. No one's being paid like that. So that's the key challenge, when your anchor point always comes back to fiat, is that reflection of value. And just even when you hear people talk about it today, my Bitcoin is worth X US dollars.
Even in the Web3 community, that prays to be paid fully on Ether and fully on crypto, and it's kind of like the mantra, they still put the payments in a fiat denomination, kind of like, we're going to pay you Ether worth $500, $1,000 for this bounty hunt or for these specific tasks. So despite all the disruption that is happening, everyone defaults back to the fiat. That's a given.
Wow, very interesting points. Thank you so much. Well, some of the major issues that we covered here are stability and speed of the transactions. I'm just curious, as a quick follow-up, whether these issues are kind of issues by design on the blockchain. And is there a way to work around it and make it as stable, as fast as what we currently experiencing with fiat currency? Sandeep, do you have any thoughts on this?
Yeah, I think you can do that. Again, if you move beyond retail payments, right? So if you apply this concept towards smart contracts in terms of making capital available, right? I mean, speed isn't that important. And there are new technologies coming up which is taking care of speed and energy consumption and all the non-green behavior of the older blockchain technology. So speed isn't as critical in terms of milliseconds like what we deal with in real-time payments. You buy a coffee, you swipe it or tap it or dip it, transaction happens at the blink of an eye. So in those cases, we are looking for use cases where you can actually look to collateralize like an accounts receivable or a paying invoice. And you take that invoice and then codify that invoice in the form of a smart contract, which has the details about the invoice, which has the amount, which has the due date. And then you take that and trigger a payment by advising like a DeFi. The DeFi will then tokenize that, invoice in the form of an NFT. And then when you tokenize that, you can actually mint a currency using a DAI, which is a new form of like a digitized, decentralized currency. And then that money gets put into a wallet of the choice of the recipient. And then you off-ramp that, whether it goes into a bank account or it gets used at a merchant location, in a fiat currency through an off-ramping. So speed is only critical for retail payments, but you could do a lot of these new use cases which are unsolved for. Nobody's cared about that. The banks do not touch it. The financial institutions and the lenders don't touch, the account receivable or a small business who doesn't have a significant presence or doesn't have too much of an electronic imprint or doesn't have a history at a credit bureau. So I think speed is getting solved through a lot of technology, energy is getting solved, but there is a lot of, other untouched and a white space in terms of use cases which DeFi can solve for, where this conventional and the regular and the new future of services comes together.
Right, thank you, very interesting. I also wanted to touch on the Asia perspective as well. China and Thailand, for example, are among the countries that have banned payments via crypto. India has introduced quite a hefty tax on income from crypto. Taxation is a big issue in Japan as well. So how easy is it for your company to experiment with crypto in Asia? Joaquín, as a company based in Singapore and operating across the region, how are you navigating the different regulatory regimes across Asia?
So first and foremost, we have an amazing regulatory team that is headed by Dylan, with whom we started working since he joined from Stride. And basically their mission is to make sure that we monitor all the regulatory environments we work with, especially with crypto, and they take into account all the modifications that are happening. Crypto is it's in a very fluid situation, regulatory speaking. There are, as every industry that gets regulated, there are countries in the world that are on one side of the wavelength, and then other countries that are in the other side of the wavelength. And it will take time before all of these get together, like it happened with the FAFTA and all the AML regulations. And what we see today is that fluctuation between one side of the other of the equation, because regulators want to protect their consumers. And when they see these heavy volatility scenarios where a lot of retail users that have direct access without any monitoring or control into these super volatile investments can lose their savings and can get in trouble, they have to chip in. And when they see that they're leveraging methodologies that could tamper protections for AML in countries where AML is a very touchy situation, then they jump in and try to protect that by capping how to use that cryptocurrency. So there are many situations that affect how we do crypto, and the way that we're approaching it is we basically build a platform that is very flexible in terms of what you can do and what you can not do depending on the geography. We already had it for our fiat platform, so the extension naturally inherited all these modularity, so that enables us to turn on and off pieces depending on the regulatory environment. And it happens so that we just did in Singapore as they changed the regulation on the digital cryptocurrency. We decided not to launch a product yet and stay in touch with the regulators until we obtained the license. And in other regulations where the regulators became more lax, we were able to, of course, in conjunction with the regulators, we were able to launch the crypto products faster. So the most important part is to be up to speed and very connected with the regulators to understand why they're having such regulatory constraints or regulatory fluctuations.
Right. Great. Very, very insightful. Thank you so much. And Benjamin, you have probably a very granular understanding of the Hong Kong regime. So how crypto friendly do you think Hong Kong is? And if there's any policies or changes that you would like to see, if any, could you kind of share?
I think the general ecosystem, I would say, is geared towards supporting a more institutional crypto environment in Hong Kong. They've closed the door to retail. So, so what is it right now? The virtual asset service providers need to be type 1 and 7 licensed by the Securities and Futures Commission. So it used to be an opt-in regime. So it's now no choice. We have, as I said, the retail market being shut off. So crypto can only be offered to professional investors in Hong Kong, aka $1 million in liquid assets and above. We've got new regulations and push, that we just responded to the Fintech Association on positioning paper that was put out by the Hong Kong Monetary Authority with regards to regulating stablecoins in the city. I would not call Hong Kong at the forefront of just pushing innovation at all costs. Hong Kong is an established financial center. I think it has more to lose if it gets things wrong. There was a big argument between the Hong Kong-Singapore battle for a while, and then you even saw Singapore start to then backtrack on some things and say, don't advertise crypto on buses and whatever in the MRT. And so it was like, okay, so there seems to be a little bit more regulatory convergence around the world with where the regulators are moving. But it hasn't been there for such a long time. And as a result of that, what we saw was just massive amounts of regulatory arbitrage by crypto companies operating around the world and just moving their locations here, there, and everywhere, splitting their entities to operate licensed and regulated one jurisdiction, unlicensed in others. It's complicated. Let's just say it like that. And the regulators naturally play catch up in a space that's highly innovative. And there's a lot of content to get their heads around. So what I would say, if I were to sum up Hong Kong, would be prudent with its approach. And again, as an established financial center, I think it's adopted an approach of, I wouldn't necessarily say caution. I would say prudence, though, there's too much stuff going wrong in crypto land, and I don't think Hong Kong wants to be part of that. Let's just put it like that.
Thank you very much. You just raised a really good point there, which is, given the decentralized nature of cryptocurrency, whether regulations can really be effective, and whether governments have more to lose than to win by over-regulating and potentially losing out talent, moving to other countries. Sandeep, you have a global perspective, working at a very, very global payments company. How easy is it for you to navigate crypto-related businesses in Asia versus the rest of the world?
Yeah, see, it's very simple. We work with custodians, we work with exchanges, we work with financial institutions, generally approved by a central bank, in a particular market around that. So yes, many markets have put a restriction on crypto mining or usage or both, but we do work with entities who basically are allowed generally by the central bank or a government of that market.
Great, thank you so much. And I just wanted to maybe address some of the questions that have been asked by the audience. So, I think Benjamin talked a little bit about the potential role for central bank digital currencies. And, one of the questions that came in is, some countries have created their own digital currencies to combat the rise of cryptocurrencies. And if the digital currency is owned and regulated by a central bank, is it really a cryptocurrency? Benjamin, do you want to answer this?
Well, it's how do you explain this or get the answer right to this? It's a digital version of fiat, right? So it is owned and it's fiat. It's run and owned by the government, right? That's what it is at the end of the day. But it's adopting all of the technology benefits and processes associated with crypto world and then using that in old school finance. So is it a crypto? Well, yeah, but not in the sense of it's something to challenge fiat. It is fiat. So there's no more analysis that needs to be done beyond that. It's a very simple answer. It's a digital currency version of fiat. And whether you want to construe it as a crypto because crypto is about challenging and disrupting. Well, it may be disrupting or improving on current ways of or current forms of payment in terms of bringing it into the 21st century in the digital age, which is great. But it's not there, obviously, designed as a substitute for itself. It's really designed to be an enhancement of existing fiat stores of value.
Right.
If I may add to Benjamin, so we work with governments around the world around advising on issuing like CBDCs. So I think the biggest question is, what problem does it solve for? And is it literally, avoiding the cost of hard notes, right? Which also is expensive, right? There is cost of cash. You have to print it, then you have to take it to the vault, then you have to distribute it. Then you have spillage and pilferage and all those kind of issues. So is it really CBDC? Is it digital? Does it drive more financial inclusion? Is there more transparency? It avoids tax evasion. But you still want anonymity. When you do a cash transaction, it's purely anonymous. A lot of people like it that way. Is it a bearer? Is it deposit, right? Because deposit M1, M3, if you look at those, they are treated differently. So it is kind of a deposit, but characteristics of an M1, like a cash, where the bearer holds money to you or the central bank money to you. So it's still very open question. There are a lot of trials going on in that space, but as Benjamin pointed out, it is a digital form of fiat.
And it could remove a lot of intermediaries that are happening today with electronic money. Currently the government can issue notes directly to you via paper, and that is a direct responsibility of the government to the end user. But when electronic money appeared, a lot of custodials like banks are intermediating that custody for you of that electronic money. So when you tap your card, that money's custody from the bank goes to the bank of the merchant. Still intermediaries. So the question that is happening today, are CBDCs going to respect that intermediation, or they're going to basically directly enable the wallets to transfer between each other through this system, and thus render some of these custodies not necessary anymore, right? So there's still a lot of questions because it's a systemic evolution that could bring potential ripples to how the banking system, for example, works today.
Right. Very interesting. Thank you so much. We have another question for Sandeep. We talked about maybe the retail payments, maybe quite far off from now, but how soon can we start buying coffee with crypto?
You can actually buy coffee with crypto today. Actually, you can use a a Gemini card and many other cards and actually use crypto of your choice. Now, the way it happens is when you use that card, you actually are using crypto out of your digital wallet. But when it travels on a payment network like ourselves, it actually gets converted into a fiat. And then the merchant gets money in the fiat. So the merchant doesn't get crypto in today's world, unless until the merchant, like there might be 20 of them who put crypto buttons on their websites or in their app. But if you want to use a crypto card today, coming from a digital exchange, a Coinbase, or Crypto.com, or the Geminis of the world, they would basically convert that into a fiat. Fiat travels, merchant gets fiat. So for merchant, there is no change. Now, when will this happen in real-time world where it's pure crypto to crypto? Now, I must tell you there are three kinds of cryptos which exist. One is this private crypto or floating cryptos, the Bitcoins of the world and the Ethereums and Solana and Dogecoin and this coin. I think they are not meant for that purpose, to be very frank. I think they are an asset and they will stay as an asset, in my opinion. Just like stock of a company, right? You don't go and take stock of a company or a share of a company to buy coffee. So I think they are an asset. They will stay in the asset class. Stablecoin, I think that was touched upon. It actually should be stable. The stability depends on the quality of the reserves, which are backed by the stable. So let's assume if they are stable, they are most geared towards becoming a choice of being used for retail payments, where the consumer uses stablecoin, merchant sees stablecoin, intermediaries could travel through stablecoin or whatever else, the digitized deposit or whatever they have. I think that has more potential. And the third one is CBDC. I know there are a lot of experiments around the world. China leading that. We've done an experiment also, and actually it's live in Bahamas. So you use Sand Dollar, which is a CBDC issued by the central bank, and then you use CBDC using a card of Sand Dollar and transact at a merchant, and that happens. But it travels fiat on our network, basically. So CBDCs is still in a pilot state, many of those, but I think stablecoin has more of the potential. But they still need to solve for stability. They still need to solve for regulatory compliance. They still need to solve for consumer protection when things go wrong. I think that's the key. But if you're looking at, how many coins are out there, they're like 1,800 coins. How many official currencies, fiat currencies are out there? 164, in the world which has existed for millions of years. So will they all exist? I think they will exist. I think will one replace the other? I don't think so. It will be choice. I think the consumer will choose how they want to pay.
Great. That was a great overview of the opportunities and challenges of the crypto, the future of crypto payments. I think we're out of time. So I want to thank all of the panelists for joining us today. And thank you everyone for listening.
Thank you.
Thank you.